Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Hedera and Hbar. So with that being said, let's just dive on in. And let's start off with this tweet here from House of Chimera. So what do you see? Rising tide, the exponential growth of monthly transactions on Hedera. The number of Hbar transactions continues to rise, and October followed this trend. Overall, close to 3.6 billion transactions, according to Dragonglass, were recorded, marking another all-time high. So yeah, October seems to be surpassing the month of August, which was the all-time high of transactional demand on the network for the month. And we did see September dip down a little bit, but October made up for it. And you know, I get it, right? Like, as we do see transactional demand rising, everyone's expecting the price of Hbar to rise as well. I don't think anyone's going to be worrying about the price of Hbar in due time. And when I say in due time, a lot of people are expecting 3, 5, 10 years, but no. Honestly, over the course of the next 3 to 6 months, I think that the price of Hbar is going to steadily increase greatly. And then over the course of the next 12 to 24 months, I think that we are going to witness life-changing gains throughout this entire market. And that's not me, trying to sell you guys a used car. That's me literally telling you guys that a bull run is on its way. A new cycle is on its way. Even if we do follow the 4-year cycle, guess what? We are very close, and now is not the time to be fumbling around with your bags and trying to sell this for that pump and trying to catch this wave and trying to catch that wave. No, now is the time to sit back, relax, and probably just don't touch any of your crypto right now. But again, the reason why I say this is because, first off, beyond the idea of the bull run starting or anything like that, we have also started to see trends really kind of being highlighted. Some of those trends are institutional grade adoption, and then also tokenization. Tokenization has been a spotlighted term this year. Obviously, we've been talking about tokenization for a while. It's not a new term. Listen, this thing has been around since, early stages of crypto, where tokenization started to get talked about quite a bit back in like early, I want to say like 2015, 2016 or so. I might even be wrong. It might have been earlier, but I just remember during 2017, 2018, it started to get a little bit highlighted, but now it's in the spotlight. Everyone's talking about tokenization, especially if you are in the world of finance. The reason why is because we are starting to see big changes. For example, I just talked about this in a recent video where Arcix Exchange actually was talking about tokenizing its interest in Aberdeen, which is a multi-billion pound market fund and has a pipeline of several $100 million worth of funds coming in to be held in that tokenized money market fund and where people can receive a yield. And this is all tokenized on Hedera. But outside of this, we actually seen a great post by Hedera. It's a 52-minute long discussion talking about tokenizing the future using blockchain for fund tokenization. And this got posted on the 26th. This is originally from October 19th. But this is a great insight on what's actually happening around the world of finance and the crucial role that Hedera is playing. And we actually see here, tokenization of real-world assets is fast becoming a key use case of Web3 as enterprises, institutions, and individuals realize the transformative potential of blockchain in bringing increased liquidity, opportunity, and efficiency to traditional finance. Hedera governing council member and asset management firm Aberdeen, currently managing over $600 billion in assets under management, stands at the forefront of this innovation, recently partnering with Arcix Exchange to tokenize Aberdeen's multi-billion pound money market fund on the Hedera network. I'm telling you guys right now, as we really kind of look at Hedera and we look at DLT, especially around tokenization, it's being tapped in heavily. And I honestly think that as we look at Hedera and all the efficiencies that are locked away behind it, I really do think that a lot of these major institutions are going to soon tap into what Hedera has to offer. Because one, we already seen JP Morgan spotlight the fact that, like, when we look at Ethereum, well, guess what? This seems like the year that Ethereum has started to kind of diminish greatly in terms of demand. So I think that as we look at what's happening, institutions will soon be looking at the next choice, the one to really kind of become a dominant leader around institutional grade adoption, and it could be Hedera. But I also think that we're going to see a wave of institutional adoption around this space, where tokenization is going to become a big hit, as we've already talked about within a lot of documentation, specifically from the World Economic Forum, from Citi, from Chainlink themselves. They even did a full report. I mean, the amount of money behind tokenization is extremely large. But again, I've already been talking about this for a while, going all the way back to September of 2022. I said over $300 trillion will be tokenized. Will it all flow through Hedera powered by HBAR? Probably not, but this is huge for HBAR. Even 1% of that market is more than enough to make a lot of people rich. And I was actually quoting Coinman, the HBarbarian's tweet from September 7th of 2022, where we did see exciting things ahead for HBAR holders, including a real estate tokenization platform built on Hedera. Furthermore, it looks like a commodities exchange have a use case in the pipeline too. Looking forward to those announcements. And here we have a quick little segment. I'm not going to play the whole thing, obviously, because it's 33 and a half minutes long, but from 12:12 onwards, it gets very interesting, so listen closely.
To me, so there's a lot going on in fintech and payments. Actually, I'm seeing a lot of activity in the asset tokenization space. I'm talking real world assets.
Yes.
So that's an area that I'm spending a lot of time on. I'm also one of them.
Can you talk a little bit about specific use cases?
Yes, I mean, not one of this, a real estate tokenization platform that hasn't been announced yet, that we're preparing PR on. We're also working with a commodities exchange. So there's a lot of things that we can tokenize. One that is relatively well known because it's been live for a couple of years is a project by our council member, DLA Piper. It's called Toko, and this is an asset tokenization platform for high value assets. It could be funds, it could be real estate or other. So yeah, I'm working on getting more tooling there for security tokens. I think that's sorely needed, and I think it's still the beginning, right? You look at the market caps in terms of security tokens versus utility tokens, still early. So I think we have a good chance to be the go-to platform there.
So there you guys have it. And yeah, I honestly think that Hedera could very well be the go-to platform, especially if they do gain the competitive advantage over the tokenization market. Meaning, like, if Hedera does start to become a dominant force around tokenization, which it seems as though they're well positioned for, then I do think that Hedera will soon see a large amount of the money flows that tokenization will bring. Also, I even said tokenized real estate disrupting a $300 trillion market powered by Hedera. Check this out. This is Red Swan CRE. This was back in September of 2022. They didn't mention Hedera at all, but we already knew that they were working with Hedera for a while. They've been working with Hedera for well over 5 years. But what's interesting is that we recently just seen Red Swan quote the video that they had recently with the HBAR bull, and we do see, wow, a blast from the past, an oldie but goodie. We went from talking about Hedera to building on Hedera. Notice the name change to reflect our marketplace, and they're quoting this video. It's about a 3-minute long video of them just really kind of talking about their plans of action around tokenization of real estate and their plans for utilizing Hedera or even tapping into Hedera. But we do see from Earthling 875, real estate tokenization pioneer Red Swan CRE are tokenizing billions of dollars of commercial real estate on Hedera, SEC compliant, and with $5 billion in tokenized assets under management, $10 billion in their pipeline, and expecting to grow to $25 billion in the next 30 months. Fractionalization and democratization of real estate on Hedera. Very exciting. But also, here you guys have a quick little insight on just how big of a market this really is.
So I'm going to talk about the market itself here. And Ed, I'm going to go to you. So who's on the supply side? Who's currently tokenizing using Red Swan? And how do you see that expanding in the future?
Well, it took a while to kind of educate the market of real estate owners. In our case, we only focus on commercial real estate. But now that the market of real estate is being challenged by high costs of debt, if you can get debt at all, equity and capital are very, very important to sponsors. And so we're seeing more and more sponsors who need capital to recapitalize their stack of equity. So they can pull out some equity rather than sell the property in a time that's not profitable. Like right now is not a good time. It's not appropriate. We're seeing owners who are saying, hey, I want to tokenize my asset. I want to tokenize my debt. I'd like to release some of the equity that's trapped in my asset right now. And Red Swan provides a great solution for that, because now if they have a $100 million asset with $50 million worth of debt, that's $50 million of their equity that's trapped in this property. The only option before would be sell the property to release all their equity, but then they don't have that goose that lays the golden eggs anymore. This way, they can recapitalize, say, $40 million of that equity and be able to now still maintain the asset and ride the value.
And here you guys also have CRE market size. So you actually have a 75 trillion total addressable market. Average 35% property equity stack is locked. 26 trillion locked equity, 1.2 trillion TAM. This is huge.
Back up. So in cases like we're seeing today where cash is very difficult, this is a very, very good tool for sellers to take advantage of.
And now I'd like to ask about the demand side. Who is and will be buying these tokens, and what does that process look like?
Well, who's been buying before has been parties interested in particular types of real estate, buying it in a tokenized fashion. They're thinking about the future of how they can take advantage of having security tokens. But now, as we've seen further adoption in the market, as you mentioned, there's a lot of stable coins coming into the market. There's Visa coming to market accepting cryptocurrency. There's JP Morgan Bank accepting deposits of stable coins. So the ecosystem of stable coins and cryptocurrency is growing. We already surpassed $3 trillion of value, and I think it's going to continue to increase. Well, these are the people who are going to need optionality to buy other types of investments that are already in a digital form. So when you start looking at those who are invested more in cryptocurrencies and stable coins, and now want to start looking how they can diversify their investments into other types of alternative investments, these are going to be the buyers who are jumping all over digital real estate, because it gives them the best of all worlds. They get the anchor of very strong and low risk real estate with a decent yield, but they also get that liquidity opportunity. So if they want to get out of it, they can, rather than have to wait a long time for an exit. So I think you're going to find a lot of people who have digital wallets right now, who've been currently holding on to a lot of and hodling a lot of cryptocurrency, are going to start diversifying. We're also seeing institutional companies that we're talking to who are very keen on converting a certain percentage of their assets under management to be digital assets under management. And so whether it be financial instruments or real estate securities, they're very excited about being able to have that on their balance sheet. And then finally, when we've talked to many of the broker dealers in the world, and also the IRAs, registered investment advisors, typically real estate is excluded from an IRA's balance sheet as they're managing their customer investments, because it's not a liquid type of investment, so it's off the balance sheet. Now that we are digitizing real estate into shares, it now becomes on the balance sheet. So now IRAs get to put their customers into a real estate asset and be able to charge asset under management fees for that, because they can include it with the other assets that they're managing for their customers. So it's a variety of people who are very interested in this asset class.
And this is what gets me very excited about the future. Like, listen, obviously we talk about trillions. Gets annoying, right? Oh, Nick, you constantly are talking about trillions and trillions of dollars, yet when is it going to happen? I want you guys to understand, these are massive asset classes. I mean, when he's talking about assets under management, look at BlackRock, for an example, trying to tap into a Bitcoin spot ETF. They have nearly $10 trillion under management. I mean, it's wild. It's wild to think about, but this is what's happening now. And again, huge shout out to the Hbar Bowl, huge shout out to the Red Swan CRE team as well. As we really kind of look at things, they even said, it's just getting started now. They already said that it's starting now. This is a big deal. I think that this is one of the largest opportunities that is in this market right now. Tokenization is truly going to dwarf anything that is really going to be happening over the next couple of years, because this is happening now. It's starting now. We don't have to wait. And guess what? The best part about this is like, these markets are extremely ripe for disruption. Like, nothing has been more revolutionary to some of these markets than tokenization, because the amount of liquidity that it unlocks, the offering that it has for those that really want to embrace this technology is unlimited. I mean, think about it, like right now. He even talked about how pulling equity right now from a house it's extremely challenging, or even, you know, trying to get any money in return, because again, liquidity is tight. Real estate is one of the most illiquid asset classes out there. And, you know, with liquidity constraints today, which we are all aware of, it's a lot harder to actually pull equity. It's a lot harder to actually pull liquidity out of this asset class. So what could really be embraced to unlock liquidity and unlock a ton of efficiencies around real estate? Well, guess what? DLT. Tokenization. Tokenization through DLT, specifically extremely efficient DLTs, that's game changing. That's why Hedera could ultimately become a pioneer around this market. And I'm very excited for the future of this. So with that in mind, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Peace out.